Raul, that pops to the top of my head is, wow, these guys should also own Bitcoin as something like that. If they're going to own cat bonds and they're going to own business interruption risk insurance and all kinds of, hedges on PMI, my gosh, why don't they own some Bitcoin? Well, it's because the presentation of that.
Hello everyone and welcome to the Daily Crypto. We are back with another video, and this time we have Chamath Palihapitiya with us, who will be talking about global economy and Bitcoin. But before we can get started, let's take a look at the Fear and Greed Index for today. As of recording this video, it is sitting at 34. Currently Bitcoin and Ethereum are trading for $20,700 and $15.94 respectively. With that being said, let's jump right into the video.
Which is effectively trickle-down economics. We've always done it under Democrats and Republicans. We've always thought the right way to think about this is effectively some forms of low taxation for corporations, and the idea that put the money into the hands of people, and what those people will do is redistribute that. And so I tend to think that that's turned out to not be true anymore, because I think what we're learning is that it's just way too complicated. The financial incentives for these companies are too perverse. And so the distribution of dollars to the edges isn't happening the way that we thought it could have in a much simpler economy in 1980. And so I think we have to go to the extreme other end, which is to say, okay, maybe the right way to think about this is to actually put money into the hands of individuals, let them spend. By spending, they're doing two things. They're going to stimulate the economy, but they're also driving more capital markets efficiency, because they're going to be voting with their dollars about which products that they want to win, right? And 300 million people's decisions in America, 330 million people's decisions in America, is probably a lot more valid than the 500 CEOs of Fortune 500 companies. And that signal is probably much more high fidelity and more reliable. And so I think that this was an opportunity in the pandemic to actually experiment more with putting money into the hands of individuals and then observing which businesses that they pick, on the presumption that that is actually a better implementation of efficient markets theory.
The old principles of a trickle-down economy are no longer working like they did in the 80s, because the wealth gap is increasing exponentially. Chamath says that bigger corporations no longer need incentives from the government, as they are already doing quite well. The real problem is that wealth is no longer trickling down to the extreme ends of the spectrum, which represent the normal consumers.
We've spent the last 30 to 40 years completely perverting the incentives in the capital markets, right? We were an environment that rewarded diversity, that rewarded specialization, that rewarded R&D, that rewarded savings, and that rewarded future profits. And then over the last 20 or 30 years, we've completely flipped that script. And instead, what we've told CEOs, it's about ruthless efficiency at the sake of resiliency. It's about consolidation. It's about current profits. It's about consolidating dividends and consolidating share purchase agreements or share purchase buybacks. It's about current redistribution to a small moneyed class. And then a thing like the pandemic basically, exposes that the emperor has no clothes, and that most of these boards were making these decisions to placate a CEO who was making these decisions to reinforce the compensation model that those board directors gave them, and then when you look at the incentives, the board directors get paid $500,000 a year. So it's just a bunch of ex-bureaucrats that get, can collect $1 million by being on 4 boards and acting like a dipshit. And it's a CEO who basically doesn't know their head from their ass.
Modern-day corporate culture has become extremely selfish, as only those at the top are rewarded the most, while those at the bottom continue to struggle. This is actually a very fair point, which needs to be taken into consideration, as people work their entire lives and still can't afford to retire in peace.
Climate change is the simplest path to normalizing the geopolitical shit show we've been in for 20 years. Ever since 9/11, we've been literally and figuratively, but literally on a death march to destabilize the Middle East in this wag the dog scenario, where, making it the centralized place where all the chaos in the world happens is our simplest path to safety and security domestically in the United States. But that hasn't turned out to be that way, because it's created all kinds of other whack-a-mole problems that we never anticipated. Now, knowing what they did, maybe that was the best solution. I don't know. I wasn't obviously in the bowels of that decision making. But in 2020, what I can tell you is if you want to fix our problems with Russia, China, and the Middle East, the simplest thing is climate change. So why is that? Well, if you actually have the cost of wind and PV, batteries, etc., cheaper than the cost of fossil fuels, the simple economics, forget the value added of of clean air and a better earth and less deforestation, less destruction, less, all of that is good. But at a simple level, if the cost per gigawatt hour basically gets cheap enough and it's cheaper than fossil fuels, you stop ripping the fossil fuels out of the ground. Now, where are the fossil fuels? They're in the Middle East and they're in Russia. Now, what do those two bodies of countries and country, what are they forced to do? They're forced to monetize all of that today, right? Because if they see a cost curve that's going down, 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 where at some point by 2030, the price of fossil fuels is basically effectively negative.
The energy sector, upon disruption, will become an even bigger deal than it is at the moment. Countries like Russia and the Middle East, who control a good percentage of the global oil and gas production, will lose all their power when a new disruptive technology appears. This will be an extremely positive move and will result in a better geopolitical environment.
Bitcoin was always that it's much better to be pragmatic and lay out a moderate case, which is that it's a hedge in a portfolio against the sort of traditionalist financial infrastructure. And so many people would get mad because they would anchor on this extremist view that it had to be everything. It had to be the solution and panacea to everything. The problem with that view is that that's just not how you maximize demand, right? When you think about products that really get to scale, there's a simplicity, and what that simplicity gives is people a very simple decision to make. Do I want to use this or do I not want to use it? And so if you want, for example, Bitcoin to get to mass market scale, the most powerful thing that you can do is describe it in simple, pragmatic terms that don't require zealous belief. And so it's just an example to me that sort of reinforces this idea that extremism never wins, and kind of like centrism is sort of the value maximizing function.
Chamath believes Bitcoin is the hedge against traditional financial instruments, as it is an asset class that gives power to the people while keeping them safe from the tyranny of third parties and governments. He also points out that in order for Bitcoin adoption to grow, its fundamental concepts need to be explained in simple terms so that the broader masses can understand it properly and take necessary action.
And it's so funny because many of them got there well after I did. They're just so arrogant about it. And I don't know, maybe I'm just dumber, but I just don't understand why people need to believe so much versus, view it more pragmatically and unemotionally. Because I think they'll find more success in the more unemotional, treatment of what it is. So another example is the entire DeFi movement. I got laughed at because somebody asked me, Laura Shin asked me what DeFi was. And I was like, I have no idea, but I own Bitcoin. And I was just telling the truth, which is I don't have the time to learn about all this stuff. And, at some point somebody will explain it to me and I'll know a little bit better, but it's not to say that it's not important, but it is to say that everything has a time and place. And if we are going to focus our energies on making Bitcoin mass market and scale, we have to dial down this zealous rhetoric and dial up pragmatist rhetoric.
According to Chamath, crypto investors are kind of delusional for believing in it so much. They get caught up in their emotions, which leads them to make irrational decisions, which ultimately ends up in massive losses. He says people would be far better off if they did not let emotions take over them and use their rational consciousness to make decisions when investing.
Very, very esoteric, exotic insurance policies. And, one of the interesting things that I've learned with my co-founder, my partner in this, he's the CEO, I'm just the chairman, but is how many of these corporations view their balance sheets and, how they're buying all kinds of esoteric insurance. And the instant thing, Raoul, that pops to the top of my head is, wow, these guys should also own Bitcoin as something like that. If they're going to own cat bonds and they're going to own business interruption risk insurance and all kinds of, hedges on PMI, my gosh, why don't they own some Bitcoin? Well, it's because the presentation of that idea is done in such a way where they're forced to make a leap too far. And because if you decompose what the treasurer or the CFO is how the lens in which they're making decisions, it's just career risk, right? It's that old adage. You're never going to get fired for buying IBM, right? And so you're never going to get fired for just having the money sit in a corporate account with earning zero at JP Morgan. Then, pounding your fists on the table for Bitcoin. So what we need is, again, more pragmatism around what it is.
Since Chamath also runs an insurance company, he reveals that there are many institutions that are looking into Bitcoin because it is an asset that they need to be invested in, as it's too big to ignore at this point. Instead of investing in traditional financial instruments, they need to be investing in Bitcoin because the upside is massive. Thank you for watching this video. Please hit the like button and subscribe to our channel so you can keep watching informational videos like this on a daily basis. See you guys in the next one.